with no supply. See, foreclosures created a new set of supply.
It did.
And it created a new set of opportunities for properties to be revamped and be revitalized and things of that sort. So without the supply, because right now, if you think about it, a lot of people are not selling their homes. So the foreclosure market was a way to create new sales within the market space. Now that there's no foreclosures, or the foreclosure bucket is real light, the demand is still high for homes. So the prices are still going to be up because supply and demand numbers are not there.
All right, Bootstrappers, welcome back to the second part of my interview with DeMarcus Ross, D. Ross, the mortgage boss. And of course, I want all you guys to go and listen to the first part of our conversation with DeMarcus. Obviously talked about his journey into the world of finance. We covered some technical things around the different types of loans that are out there, QM versus non-QM loans. So it was a great conversation. So I know, DeMarcus, with the way the real estate market is going right now, you got home prices going up, interest rates are going up, and a lot of people are concerned that they're being priced out of the market, especially here in Atlanta.
Yeah, I mean, the market, here's the thing about home pricing right now is it's going up because Atlanta particularly is that new city that's becoming like a New York or becoming like a Miami. Only reason why it's not Miami because it doesn't have any water. But the prices are moving up because you got people from the West Coast moving here because they're tired of being on the West Coast with all the taxes, and their home prices are ridiculous on the West Coast. They come here to Atlanta, they can get 3 times a house what they were getting over on the West Coast.
So they're driving up the prices.
They're driving up prices. And then on top of that, you got a supply and demand issue too. You know, there's a demand for houses with very low supply. So everybody around here is saying, I want to pay for this house at this number. Either big bank take little bank, so to speak, you know?
Yeah. And so what are some of the popular loan programs out there for people that may be trying to buy their first home, or maybe looking to buy their second home, or people that want to invest in homes? What are some of the most popular programs out there?
Well, a lot of the most popular programs, I mean, one of the most popular programs is FHA. FHA has been a popular program for years. In Atlanta, Georgia, the FHA lending limit, because that program does have a lending limit, is let's just call it $650,000. It's like $649,000. It's some change. Let's just call it $650 for even numbers.
So you're saying you can buy a $650,000 house with that program?
Yes, with that program, correct. With a 580 credit score. And in certain cases, you can get a 500 credit score if you got the cash to the 10% down for that program. But you can get in a house with an FHA with a, I'm gonna say 580 at 3.5%, $650,000 home. So if the loan amount has to be $650,000. So you could be looking at a house that's 660, 665, still getting that house at 3.5% down. Long as the loan amount's below 650 or below, 649 or below, you're fine.
So the person only needs to put down 3.5%.
Correct.
So they can buy a $650,000 home with 3.5% down.
That's correct. Yes.
Okay. All right.
3.5% down. That's the one that's been around forever. But then you got other programs that's everybody speaking about online. People talking about the 1% down program. You put 1% down, and the lender gives you a 2% gift or grant. For that program up to a certain amount of money. So like I seen one that was 2% down up to $4,000. So if the 1% down you put down and the 4,000 doesn't cover the rest of the down payment of 3%, you still got to make it the difference. But they pretty much giving you $4,000 is what it comes down to.
Are they really giving you $4,000, or are they just moving the money around? Because we know from being in the mortgage industry,
the money's being moved around.
They're just moving the money around.
It's being moved around. So at the end of the day, there's other programs people talk about. I say bark about it because they barking like it's just the best thing out there, but they have down payment assistance programs.
Right.
And then they got the zero down programs, which is nothing but no way saying a down payment assistance program or DPA. Some of those, I really don't like much of any of them, to be honest with you. I don't like selling them. I rarely do sell them. I've never sold one, honestly.
Aren't these the same programs that got us in trouble back in 2008?
Some of them are, yeah. I mean, think about this. I'm going to give you, let's just say I'm going to give you $15,000, right? and to put down your home. All right, so you got 15,000. I got down payments on that 15,000. And let's say that the lender says, by the way, you're gonna pay the broker his fee. So I gave you $15,000 towards your home purchase. Okay, so instead of your home being 100,000, it comes down to 85,000 because the down payment came in to kick it to 85,000 for the loan amount. But then I'm gonna tell you, you're going to give the lender $10,000. So you're coming to the table with 10 grand to give the lender, and then you turn right around and you're paying the rest of the closing costs.
So is that really?
And the 15,000 is a second mortgage on the backside.
Yeah. So, and I know for a lot of our listeners, I know it's probably hard to follow the math here. I mean, this is probably something we probably need to whiteboard one day.
Yes.
Because there's trickery in the math when it comes to these down payment programs. In my opinion, from me doing analysis on, I'm not a big fan of down payment program. There's trickery in the math that a lot of people, and I think banks and financial institutions, the goal is that they want to catch people who aren't financially savvy, who don't know, for lack of better words, I hate to use this term, but they don't know how to count, right? And I mean, counting financial count.
Correct.
And that's how a lot of people get caught in these programs. But I mean, the math don't math right.
No, it's a lot of these programs, and again, people, and it's something I've seen recently, people will get out and just start saying things, but not realizing that when you say something, the data has to back it up, has to be right. I can't just tell you I'm gonna give you a down payment of XYZ amount of dollars and not tell you where that money first came from, to the stipulation of the money. Because some of these down payment programs tell you you gotta stay in this loan for XYZ amount of years.
Yes.
Then it's forgivable. Or you have a second on the backside that you don't have to make a payment on, but it's a balloon.
Yes.
So if you go to refinance the property, you still pay my 15,000 back.
Yeah.
Then you have those that are a true second, where you have a first and a second for real. And then you have those that are forgivable, but they bump your interest rate up by 2 points.
Yeah. Yeah.
So you got to read the fine print.
And the loan officer or the broker who's selling this product, and this is what I want people to understand. A down payment assistance, the money that you, first of all, like you said, the bank or the institution will basically give you a second mortgage against your home.
Mm-hmm.
You still have to come and pay the broker fee.
That's correct.
The broker who's financing this product to you, you still got to pay, or basically facilitating this loan for you, still got to pay them their fee.
That's right.
So pretty much what you would have been paying in down payment, you're now paying it to the broker.
That's correct.
But here's the difference. The the way I like to call, here's where the game is being played. If you were to put the money as down payment on the home, that would be equity in your home.
That is correct.
The payment to the broker is like throwing money down the drain.
That is correct. That's and it's funny. Okay, I'm gonna say the numbers, and the math is not gonna math, but I'm gonna say the numbers. 3.5% down, or let's take a regular conventional loan of 3% down. You got 3% down. Down payment's 3%. I give you down payment assistance. The 3% goes into a second mortgage for you.
Correct.
Okay? The broker fee is 3%.
Correct.
So all we just did was
you just swapped.
Just swap.
Yeah.
So that's where I often say.
But the big difference though is the broker, the 3% down, if you would have paid that, is equity that you put into the home. Remember we talked about it on the previous on the last session. You just move the money into the home.
Here. Yes.
The broker payment is not going into the. You don't get any credit for that. That's money going away.
That's correct. And there's also a situation where I could say, I know you're putting the 3% down, so you're moving the money from your bank account to your home. The broker fee, because you're actually using your own money, the broker fee we'll make the lender pay for it.
Correct. That's exactly
And
right.
the lender can pay the broker fee.
Yes.
And you don't have to worry about paying the broker fee.
Right. And that's another thing that people don't understand is that the lender can pay the broker fee.
That is correct.
Because the broker fee is really, it's a sales fee. It's a fee for the broker bringing a customer to the lender.
That's correct.
And there's only one or two places that money gonna come from. Either the lender is gonna pay it or the borrower is gonna pay it.
That's right.
Most borrowers don't know that.
They don't.
They don't understand that's how the game is played.
That's correct. They don't know it. And that's one thing I try to tell. I tell all my borrowers, every single one of them, here's the fees and here's where the differences are. Here's how we can make it happen.
And so the moral of the story of Bootstrappers is when you hear about programs, down payment assistance, I don't have to put no money down. I'm putting 1% down, which that's a whole nother story because those programs, they to me, they're redlining you because you can only buy homes in certain parts of the
they have AMIs. That's right. They have AMIs for a lot of programs. With the area median income, you got to make less than the area median income, 80% less than the area median income.
Yeah, I mean,
I
mean, most of those programs in the hood.
Right, but think about it, a lot of times if the area median income is 106,000, you can make more than 80% of the area median income.
Yeah, that's a form of red. You don't think it's a form of redlining?
I think that it's a form of just you call it redlining because they're putting people in certain areas where they can only move to.
Yeah,
because you can't afford to buy in Buckhead. That number.
No, you
80,000. Okay, if I think the number is 86,000. For here. If the area median income is $86,000, you got to be at 86,000 or below. Let's say you're 85K a year. 85K a year. Buckhead pricing is $700,000.
Exactly.
How's the math going to work for you to do that?
It doesn't. It doesn't. I mean, that's why I say it's a form of redlining.
Yeah.
The 1% down program is a form of redlining.
Mm-hmm.
That truth be told, the FHA program is kind of the form of redlining because certain communities would not let FHA borrowers in their community.
That's correct. A lot of people don't know that though.
Right. Yeah. So, all right, let's move on. Let's move on. And I think we kind of talked about the pros and cons of these programs, but the impact of home values on the market.
Mm-hmm. Home
prices are going up. Now, I have my theory why home values are going up.
Mm-hmm.
But I want to get your opinion. Well, let me first start with my theory of why home values are going up.
I want to hear your theory.
Very, very simple though. In 2020, when the pandemic happened, or some people call it the plandemic, right? There was a moratorium on foreclosures.
That's correct.
No one could foreclose on homes, right? Remember?
I remember that.
The government, the United States government, put a moratorium, which means that they stopped all foreclosures.
That's right.
What people don't understand is that foreclosures is what actually help calibrate, for lack of better words, the market. Foreclosures was needed in the market to control valuations of homes because everything's built around sales comps. So if Johnny down the street foreclosed, my home value lowered, right, as a result of it. So foreclosures kind of help control the valuations in the market. When they put a moratorium on foreclosures, all valuations kept going up. There was nothing to pull the values back down.
Mm-hmm.
I personally believe the banks did that. The government and the banks did that for a purpose. Continue to let the values go up, artificially go up, so that now if something happened, valuations was continue to stay kind of high. If they come down, they ain't gonna come down too low, even to the point where you had people, homeowners, foolishly overpaying for homes.
That is correct.
So the values of homes are going up and will continue to get pushed up as a result of that. If they come down, they're only gonna come down slightly, which in the end ultimately blocks out majority of the people in this country from even owning a home.
Yes, and you and I've had this discussion, and your theory is, I have to add something to your theory.
Yeah.
And with no supply, see, foreclosures created a new set of supply.
It did.
And it created a new set of opportunities for properties to be revamped and be
Yeah.
revitalized and
Yes.
things of that sort. So without the supply, because right now, if you think about it, a lot of people are not selling their homes. So the foreclosure market was a way to create new sales
Yes.
within the market space.
Mm-hmm.
Now that there's no foreclosures, or the foreclosure bucket is real light, the demand is still high for homes. So the prices are still going to be up because supply and demand numbers are not there.
But do you think that the government did not create this supply and demand problem?
Yeah.
This supply demand problem is not organic.
They created it.
It's been artificially created.
Yeah.
And then you got hedge fund guys coming in, buying up homes and things of that nature, right? It's an asset class now that they own. Who to say that, in my theory, I think the government helped push this agenda because they knew that the hedge fund guys was getting ready to get into this game. They want to now own an asset class that's going to constantly go up in value.
Mm-hmm. Yeah, it only makes sense because they spent money in it. They're investors. They want to make their money. So yeah, it only makes sense.
Yeah. So with that being said, let's get into some of the myths around home ownership, because I think this is a great segue because, like I said, we can go deeper into this whole thing around what the government is doing and what the hedge fund guys are doing. But there are a few myths that I think a lot of people need to be made aware of. And the first myth that I want to start with, and you being a broker, is good credit is all I need to buy a house.
That's a big myth. That's a major myth.
Why is that a myth?
There's money at the table that has to be spent. Somebody's got to bring money to the table. Now, of course, the lender's going to bring money to the table to fund the deal, but you got to bring money to the table as well to close the deal.
Mm-hmm.
And you're going to need some. You need to show the lender that you have cash in reserves, and you can close the deal, meaning that you got closing costs money, whatever it may be, to close the deal.
Yep.
And that's a huge myth. A lot of people say, well, no money down, man, I just go buy a house and just trade keys. This ain't a car.
Right.
You're going to have to put, the lawyer going to want his money. The title company going to want their money. The appraiser going to want their money. All the people want their money. So you got to you'll be peeling out that paper at the table. Well, you'll be wiring that money in at the table. Or if it's so much, it's like under $3,000, you can write a check for it.
Yeah.
$3,000, but you're going to be spending some money at the table.
Yeah, I mean, I would hear people come to me and say, man, I got an 850 credit score. I should buy whatever house I want to buy.
Okay.
That's not true.
No.
Because there's more involved than just your credit. First of all, if you just stick with credit, we got to now understand what's your utilization, right? What's your DTI? What's your debt to income ratio, right? Mm-hmm. Do you have money to put into this? Do you have reserves to pay this loan? There's a lot of things that go into play other than your credit score.
There's a ton of things that go into play, and like you said, you touched on most of them, and a lot of people don't understand that just because you have an 800 credit score doesn't mean that you're gonna close this house.
Right.
Does not mean that at all. Because if I look at a bank statement, you got 800 credit score and have $2,000 in the bank saved up,
right,
and have $1,000 in your checking account, don't mean you're buying a $500,000 home.
No,
that's not gonna happen. Then we're gonna close the deal. I don't care. You can go get gifts. All you can say, well, I'm gonna get a gift. They don't give me this, give me that. The gift's cut off at a certain number, depending on the program. So at the end of the day, you still ain't buying a home.
And the gifts are dangerous anyway, because if somebody gifted you the money, that means you never had the money
to begin with.
Right. So I mean,
listen, that myth that's a big myth that I've heard people say that too, man. I got 800 credit.
So let me ask you this then. Do you think that everybody should own a home?
I think that everybody should have a place to live.
Correct.
Home ownership is a privilege.
Yeah.
And that you got to earn the privilege.
Mm-hmm.
Everybody should have a place to live. Yes. Mm-hmm. That's a right. Everybody should have a place to live. Mm-hmm. However, home ownership is a privilege. If you do the right things, become a homeowner, then yeah, you should. Mm-hmm. But it's not built for everybody. Home ownership is not built for everybody.
And if you go back into history, back before, I think it was the son Bush, George H.W. Bush. He's the son, right?
Yeah, George Hubert and George, what's the other one? George W. Yeah, I think so.
Yeah.
W's a son.
W's son.
H
So
is Huber's the daddy.
okay.
Yeah.
So before W, home ownership was something, like say, it was more of a luxury.
Mm-hmm.
I mean, at least when I was growing up in the 70s and 80s, I mean, if you owned a home, that's because you earned the right to own a home.
That's correct.
When George W. came into office, there was this big push around home ownership. Everybody should own a home and all this type of stuff, which if you think about it, if you go back and just look into history, it all correlated back to the stock market. Because George W. is when mortgage-backed securities became pretty popular.
That is correct.
Right?
Yes, I remember that.
When they started selling these mortgages on Wall Street,
yes,
which was ultimately what ended up with the 2008 crash.
That's correct.
Home ownership has always been something that should be a privilege, not a right.
Correct.
Like you said, having some place to live is a right, but owning a home is really everyone shouldn't have that right to do so, just because there's a lot of factors involved.
The way the economy is, the way the society is built, everybody will never be homeowners. Every single person in America will never be a homeowner.
Yeah.
Just because the way the economy is built.
So, with that being said, do you think that home ownership creates wealth?
No. Buying a single home to live in does not create wealth.
Well, but everybody talks about it. Every bank that you hear, you hear people online saying that, hey, the wealth, you even hear politicians. I heard politicians the other day saying that the way to wealth is by owning a home. I think that's a lie.
Well, let's take the words they use. They say owning a home. A home that you live in is a liability.
Yeah, absolutely.
Because it doesn't write you a check. It does be a savings account where you could say you could put money in and pull money out. But if you bought a $200,000 home, you're gonna be a long time to put $200,000 in it. You can get out of it.
Right, yeah.
So therefore, no, it's not. And $200,000 don't make you wealthy either.
No.
Now, what they should be saying is, investing in income producing property will make you wealthy. That's what they should say.
But they don't say it that way. Yeah, and there's a reason why they don't say it that way.
We know there's a reason why.
Yeah. There's a reason why they don't say it that way.
Right.
Yeah.
Yeah.
All right. So, and do you really own the home though? Does a person that buy a home? I think that's another myth.
It is a myth.
That people feel that if they buy a home, and this is any home. This is investment, real estate. I mean, investment, home, the home you live in, and things of that nature. Do you really own the home? Do you, DeMarcus Ross, really? You're a homeowner, right? Do you really own your home?
No, I do not.
Right. Who owns it then?
The county owns it. The county. And I have a city and county tax, so I got both of them, A and B. But no. And here's how you know you don't own it. First and foremost, pay attention to documents you sign.
Right.
Look at the paperwork before you sign it. There is something in the documents that's a security deed that's in the documentation you sign. And that security deed is one piece of paper that has an address on it.
Yeah.
That address is the property that's attached to give that paper value. Okay. That paper now has value. That paper is secured by that property behind it that's on paper.
Yeah.
So you pay off the mortgage note. They give you this paper. 5 years from now, you ain't paid no property taxes.
Correct.
And the sheriff rolls up and says, hey, you got to get out. The house is mine. What you mean? I paid my house off. No. You paid off the note.
Right.
But we, the county, you owe us money.
Yeah.
We're taking the property.
Yeah.
Or if you really want to be really bad, here in Atlanta, Fulton County, put a 12-foot tall fence around your house and don't talk to the city or the county before you do it.
Or don't talk to your HOA.
Or your HOA if you got one.
Yeah. Right.
And see how long that fence stays up without the nasty grams coming to you.
Right.
You can't do nothing on your property. That's a big thing, such as like put a storage building on your property that's over 500 square feet. You can't do that without the county knowing that you got to get a building permit to do it.
Yeah.
They got to give you permission to put it on the property.
Yeah.
So if you got to ask somebody for permission to do something, does that mean you really own it?
Yeah, I mean, and I think what people need to understand is what you're saying is there's really a hierarchy, right?
Mm-hmm.
The lender that lends you the money to buy that home has first priority of ownership over them. Now you on paper, you say, hey man, I own my home, blah, 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 right? You know, and you eventually when you pay it off, then you know that security deed comes to you, right? And
That's
and
right.
I learned this when I got involved in the private lending, because when I would start buying private notes, people I actually owned the home more so than the guy that I loaned the money to.
That's correct.
The home is the collateral for the loan that I gave to them, right?
Mm-hmm.
So, but then behind me as a private lender or the bank
Mm-hmm.
is the county. That's the reason why we have escrows,
That's correct.
because the lender want to make sure that the taxes are paid.
Mm-hmm.
That's the whole point of an escrow,
That's right.
because they don't want the county or the state to take the property in a tax lien deed.
That's correct.
Right?
That's exactly correct. Yes. And a lot of times, if the taxes aren't paid, the lender or the
Will
taxes
pay
are
it.
short or they're short. The
The lender
is
will
going
pay.
to pay it
Yes.
and tax it onto your note.
Yes.
And you're going to pay it back through the note.
Right.
They're not going to, they will never, they're 99.9% of the lenders out here in America will never let that property go if they still got a first mortgage position on it.
No.
To the county.
No.
They
Absolutely.
will make sure they pay it.
Absolutely.
Yeah.
Yeah. So, and again, this is not to say that people should not want to own real estate, because I think it is investment property real estate, in my opinion, income producing real estate is your greatest way to creating wealth.
That is correct.
I will say it, and I know you may not be able to say it because you're licensed, but home ownership is not the way to wealth. Meaning owning your personal home, contrary to what people may say. Because even the equity that people say, well, I got equity. Well, you built that equity. You paid into that.
I'm going to help you out right quick. I'm going to make this real short and sweet. You don't have that equity. The bank has
The
that.
bank has that. Absolutely.
Because you got to ask the bank for the money.
Absolutely. That's
a whole nother conversation.
That's a whole nother conversation. That's right. So listen, we're coming to the close, and man, this is a great conversation. We could probably go longer and in depth, and we will come back and have you back on where you and I do a lot of whiteboarding, so we maybe need to do a whiteboard session to kind of help people see the numbers, right?
Yes, we do. I would love to do that.
Yeah. So, but listen, I thank you for being on the show. I know a lot of people are going to get a lot of great things from it. How can our bootstrappers connect with you online socially?
Very easy. Instagram.com. I am DRoss the Mortgage Boss on Instagram. Feel free to shoot me a DM. If you look at any of my posts on Instagram, my office number is on there, 470-792-8699. Shoot me a text message. Be more than happy to answer any questions on any situation. If you got a property that you want to refinance or pull some cash out of, do some investing, I'll do that as well. If you want to get a hard money loan, I can do that as well. As far as commercial loans, I do that. I'll do any loan out here on planet Earth that needs to be lent. I like selling money.
Right.
Money's the best commodity to sell.
Right. Well, good. Listen, man. So as we always like to say, as we close on the show, there's a phrase that we always use, which you already know. And we like to end our show by saying the greatest phrase on the planet Earth: keep bootstrapping. All right?
Amen.
All right, take care.